All right, good morning once again. So today I'll be teaching us, I'll be introducing cryptocurrency and blockchain to us, and then I'll taking us through how to buy, sell, set stop loss, and take profits. So this class won't exceed 45 minutes, hopefully. So basically, the reason why we have crypto today, it's because of a similar time, similar period like this times back in 2008, whereby there was inflation and everything was just losing value, and everything was traced back to the fact that money was too centralized. Money was too centralized. That is the central point where money is generated from, and it controls the supply of money. And if you notice, the more money is being printed into the system, the more it's causing what we call quantitative easing. And that quantitative easing now is causing even more inflation because of there's inflow of money. The products are still the same, but the prices have increased. And then the income didn't increase, the income didn't improve. So people are having more expensive things on their hands, but they're not having more money to buy them. And then there are too many cash inflow. So before cryptocurrency even came into being, crypto is simply what I call money evolved. Crypto is money evolved. Money has evolved from what you used to know it as, and to digital money that you can still use, you can still spend it, you can accumulate it, it can make you wealthy. You know, cryptocurrency have come to make life much easier for the common man. The common man can accumulate a few digital assets, and then digital asset gives increases in value in a period of a year, and the person becomes super rich. Or the person gets a very wonderful airdrop, and the person becomes super rich. I remember when I think it was Judy or so, when it got airdrop to people, and it made people millionaires overnight. That's the power of cryptocurrency. The common man had a chance at financial freedom. But then cryptocurrency didn't come out of nowhere or just anywhere. It evolved over time. Like it was money evolving over time. So eventually, even if we don't have cryptocurrency today, we're going to have it eventually, because money has simply been evolving from the time of trade by barter to the silver, the calories, the metallic coins, and then we got to the paper money that we're using to today. Though that paper money now, we are seeing that based on the amount of um, different kind of currencies we have in the world today. Different kinds of currencies we have in the world today. The Bitcoin now, which is the top cryptocurrencies by market capitalization, it's now number 3 most popular currency in the world after US dollar and euro. After US dollar and the euro, Bitcoin is number 3. So, and the way it's going, maybe in the next few years, Bitcoin will become top with all of them. Of course, it's going to take a lot of more adoption, more institutional adoption and retail adoption for that to happen. But we can say that Bitcoin and cryptocurrency has come a long way in 12 years. So as money kept evolving from paper currency, we got to ATM cards, we got to electronic money like the MoneyGram, the Western Union, the PayPal, the Payoneer, and the rest. And all these things, all these levels of evolution for money, is a way just to make it easy for people to spend their money, to be able to exchange goods and services, and also build wealth. So in 2008, a man or a group of persons named Satoshi Nakamoto decided that to create a cryptographic form of money that would give people, that will make people to be in control of the value. Now, I tell people that if we all of us decide today that Bitcoin, if all of us want Bitcoin to lose value, every single person that's holding it will just abandon it, sell it off, and then Bitcoin will just drop in value. Because one thing about cryptocurrency is that it's community centered, it's community driven, it's people driven, in the sense that we are the ones that give crypto value. If you notice, most crypto community, every crypto community, it's always targeted, they're always community driven, always community centered. Because without community, your crypto has no value. Without community, without no one using what your cryptocurrency, it won't have value. Without people holding your cryptocurrency, it won't have value. So to tell you that the power of money is not back into the hands of people, it's not back into the hands of people. So it was in 2009 January that Bitcoin was officially launched. And after Bitcoin, other cryptocurrencies come out in order to scale the cryptocurrency form of money. Because at first, Bitcoin didn't really have much issues and it didn't have as much value as it does today. But over time, as many people started discovering about Bitcoin, scalability became an issue, transaction speed became an issue, and all that. So other forms of cryptocurrency came out to solve that problem. So one thing you should note that is that every cryptocurrency we have out there that is valuable should be able to solve a problem in the cryptocurrency ecosystem. I hope we're following. Every cryptocurrency out there that has value and that will last, it's supposed to solve a problem in the ecosystem, in the world, for people. So it's supposed to be a problem that is to solve it. So that is what will make a currency last. One of the reasons, like look at now. At first, Ethereum was the only cryptocurrency that you can build on. But now we're having other cryptocurrencies that are also creating platforms for you to be able to build application on. We're having Cardano, we're having Polkadot, and the likes of it, that you can build other applications on top of it. So you know where cryptocurrency came from. You know the reason why it's here, to solve money problems, to give financial freedom to people. But then there are sides to it. There's so many sides to it. People join cryptocurrency for a lot of reasons. Of course, money is at the top of that top of the list of those reasons. But then we come into it with the wrong mindset, in the sense that we think it's a money doubling scheme or we think it's a Ponzi scheme. It's not. It's neither a money doubling scheme or a Ponzi scheme. It's not like you need to have a financial management mindset around. Sometimes you need an adequate portfolio management, an adequate risk management mindset for you to be able to use, for you to be able to manage. If not, you find yourself in a cycle of, it can even push you into psychological meltdown, because the market will just be playing with you. You see yourself always buying at the wrong time and always selling at the wrong time, because the whole market emotions will just be dragging you up and down. So now, Bitcoin has several, cryptocurrency have different ways that you can use to monetize it. And every single day, it's evolving. As you're discovering, the more research is going into it, the more different platforms are creating different systems in order to scale. Because everyone solves a problem. I remember when Ethereum gas fee, Ethereum became expensive. The gas became expensive because of too many DeFi applications built on it and so many people using it. So Ethereum the gas fees became very costly. So other platforms like the Binance Smart Chain came out in order to create a bridge so that people can still do their transactions but with cheaper fees. And then we're now having all that. So Ethereum retail, we're trying to scale that level, scale from what we call a proof of work consensus mechanism to a proof of what's that again? Proof of stake consensus mechanism. We'll get to all that. What all those consensus mechanisms and what it means. So basically, I want you to understand that every single cryptocurrency out there, if it's not solving a problem, over time it's going to die. It's going to die away. If it's not solving a problem, if it doesn't have a strong community, it doesn't have a strong team, then eventually it's going to die away, because community, use cases, and strong team goes a long way to show you whether a coin will last, whether a coin has a future potential or not. So now, different ways to monetize crypto. We have trading. You can trade it, you can invest it, you can stake it, you can earn rewards. There's so many reward wallets out there. There's so many rewards wallets out there. You can earn interest. You can earn interest on your cryptocurrency passively. You can do what we call in the buying part, in the trading part just basically has to do with short term. Between 1 day and 7 days. People that just want to trade regularly. That's why some persons buy a coin and they expect to start moving that day. And I'm like, come on, if you've been in this space for long, you know that one of the things you should have in a large quantity in this cryptocurrency space is patience. If not, you're going to lose a lot of money pursuing daily trends. If you can think long term, if you can think like an investor, you're not going to lose so much money in crypto space. Now, these are tips that I'm telling you now that would help you eventually, because the market is going to misbehave. The market is going to misbehave. You can wake up one morning and see your portfolio, all of them, everything you bought in red, and you will go and rush and panic sell. And you wake up 2 days after, everything is back to green, and you'll be regretting. Now, like I said earlier, I pointed out factors that will help you know what coins are good and what coins shouldn't you bother about. There are coins that just buy them to make momentary profit, but you can't hold them for long term. As long as you make profit on them, you sell off. And there are coins that you can hold for long term, because so even if they are misbehaving in the short term, you can close your eyes to the short term misbehavior and wait for it to move in the long term. So coins like Cardano, Link, and Litecoin, these are coins that probably right now they might not be moving much. Of course, Cardano has really moved in the past few months, a couple of months ago. No, even Litecoin got to $250 before it dropped to 160, of which this is the very good time for anybody who has not acquired Litecoin to acquire it. So like I was saying, trading is one of it. Trading is what you do short term. Investment is what you do mid-term and long term. Now, the short term only lasts as long as 1 month. Mid-term is up to 3 months. And long term is beyond 3 months. For me now, I've been holding Link for over a year. This is of a year and 3 months. For me, of course, I've sold part of it already, but I'm still holding some. The goal is $100 for one, and then we'll finally sell all the bags. So apart from that, then staking. Staking has to do with holding a particular cryptocurrency in a dedicated wallet or exchange in order to earn dividends on it. Now, there are cryptocurrencies that you can hold. The different places you can hold them. You can hold them on an exchange. Maybe the exchange is a dedicated place for it, and you can earn the cryptocurrency back. That is, take for example, NEO now. If you're holding NEO, you'll be earning gas. NEO and gas are two different cryptocurrencies. But if you're holding NEO, for example, on OKEx, you're holding NEO on OKEx, for example, you'll be getting gas. At the end of the month, you'll get gas as an extra cryptocurrency. So now, NEO in itself might not be moving so much. It might not be on profit, but you're earning by holding NEO on. You just bought NEO and you're just holding it on the exchange, on OKEx exchange, and you're not selling it. So at the end of the month, you'll be allocated some amount of gas. So whether NEO is on profit or not, you are making extra money by getting gas another cryptocurrency. Same with Algo. If you're holding Algo on OKEx, for example, you bought Algorand. You're holding Algorand, for example, and on OKEx, at the end of the month, you'll be allocated some extra Algo for holding Algo. Of course, you can also hold Algo on Algorand wallet. Algo has its own wallet, so you can hold Algo on Algorand wallet, and you earn more Algo. So this is staking. Now you can also have what we call reward wallets. These are passive income methods. Maybe you have tons of money. You're looking for a place to save it. It's better for you to save your money in staking them as cryptocurrencies and holding them in the bank. In the bank, they wouldn't so much appreciate. It's highest, they will just be taking away money from you for transactions and all that. But if you're holding your funds in all these rewards, staking wallets or staking exchanges or reward wallets, your money is there, but it's passively an income for you. So let's just say you're saving money. One of the laws in the law of building wealth, there should be a portion of your money that you're saving. There should be a portion of your money that you're reinvesting. And there should be a portion of your money that that is actively multiplying for you. So that part of your money that you're saving can be in something like a staking platform or a reward wallet, so that it's there. You're saving it gradually, but at the same time, it's also yielding interest for you. And some of this, the annual percent yield of these currencies are better than what a bank will give you. Maybe if you're doing a fixed deposit with a bank, or you're saving your money in the bank, it's much more better than what you make in a year in a bank. So this is another way of earning, just earning. Now, another way to earn the cryptocurrency is long-term investment. In long-term investment, what you do is you look for coins that have low market cap. I have videos on. I have a video I made on this particular how to pick out your coin that can do 10 times the money you invested in it, maybe in a period of 1 year. I made a video on it on my YouTube channel. My YouTube channel is going to help you a lot and all that. So hope you all can still hear me. Can you still hear me? I'm still going to get, these are all introduction. I'm going to get past where I show you how to buy and sell. What's our own introduction? I just want to make sure you're taking note of what I'm saying. Can you still hear me?
Yes, we can hear you.
All right.
Yes, I can hear you.
Okay, it's fine. So in the long-term investment part now, you look for coins that are very cheap. Probably a coin that's still at $0.01 and with a low market cap. And the supply is also not too much. The supply is not ranging, it's not ranging in billions. So if the supply is within millions, or maybe at most 1 billion, sometimes coins that have low market cap and have good use cases, but have plenty supply, can still do well. But then if it's within less than 1 billion and it has a market cap between 50 million and 100 million, or let's just say at most 500 million, you can, and then depending on the coin has a good use case and it's less than $1, you can buy that coin. And it has a very good team, transparent team, and the roadmap, their plans. They're very transparent about their plans, and they're actively always working on the plan. You can buy the coin and hold it for a period of 1 year. That coin have a tendency of multiplying, of giving you 10 times or more of it. Now, we have several use cases to prove this. We have several use cases. We have coins like XDAI, we have XOR, we have Link, for example. Like, look at Link. Link in January last year was at $1.5, and it got all the way. Today, Link is at $26, and it actually got $32 if not for the, it dipped a little bit. So that's how many percentage? That's over 10x in a period of 1 year. That's over 10x. So if you're looking for a way to like put in your money for a long time, you look for a coin that is under. Look for a coin that is under 500 million market cap, less than $1 value, and very good use case, strong team. They are always updating their community about their progress and their future plans and all that. And it's less than $1. You get it. Hold it for a year. I'm telling you, that coin can move all the way from less than $1 and get to like $10. That's plenty money already for you. That's 10x, and if not more. So that's long term. Long term, actually looking for a coin that can give you 5x, 10x, and then you hold it for a period of 6 months, for a period of 1 year. You might think that 6 months is too far because you buy a coin today and expect to make profits tomorrow. The profit you make in short term, you can only make reasonable profits in short term of like a few days because of the bull run. If we go back to normal system now, you see that the at most you can make in a month could be like 15%, 20%, 25%, unless you're using leverage or margin trading. So I always encourage people to have the long-term mindset. If you buy a coin, it gives you 100% in the short term. Fine and good. But another thing you would learn in this series is compounding your profits. Compounding your profits. You shouldn't buy a coin and then have all these big expectations for it to eat 100% all in the short term. That's almost unrealistic. It's possible, it's doable, but then what if you are disappointed and it just gives you only 15% in a short while, and then you angrily sell instead of taking out that 50% profit and then leave the remaining 75 or 85 to yield maybe the period of 1 month. So these are another way to monetize your crypto in this time is now we have decentralized exchanges like the Uniswap, the PancakeSwap, the Bakery Swap, the so many swaps, the 1inch exchange. There's so many of the swaps these days, and more is even coming up. We have OpenOcean and so many. Now I'll get to decentralized trading on another day. I also have a video. I thought on it. I think that should be like 3 weeks ago or so. I saw my premium community on it 3 weeks ago. So now there are two kinds of exchanges. All the exchanges are categorized into two: centralized and decentralized. Now, centralized, for example, is OKEx, Binance, BitMEX, Bybit, and the rest of it. Kraken, Coinbase, all of them. Those are centralized exchanges because there's somebody out there holding the key to these exchanges. It doesn't happen to the person, it doesn't happen to the system. Your funds will be gone. You're not really in control of your funds on centralized exchange. That's one thing you should know. That is why you should use reputable exchanges at best, so that you will not wake up on money and start shut down. Like what happened to one exchange? One very minor exchange I bought a coin on, but the money I had on it was just $50, and then I woke up one morning and the exchange was gone. With plenty, things they said that was the problem. So so if you're going to use centralized exchange like OKEx and Binance, and make sure you use the ones that are reputable, the ones that are popular, and at least have a history of strong security. That's not 100% guarantee. There's no 100% guarantee in this space. And that's thing you should note. There's no 100% guarantee in this space. So you prioritize your security a lot. That is why when you sign up on an exchange, you see them show you steps to take. Sign up and secure your account. Always secure your account to Google Authenticator. Always, always. Don't go and sign up with your email and password and think you are protected. Your password can be bypassed easily. You can be easily hacked. So make sure you secure your account to Google Authenticator. Very important. Very important. Bind it to the email so that before anything happens on your account, you get an email notification and you get if possible, save as SMS. You get the SMS notification, get email notification, and then you confirm and verify whether you are the one taking that action. If you're not the one taking that action, they will just tell you immediately to secure your account. So do not joke with your security in this space. because people are waiting for you to be careless about your security, and they will disappear with all your funds. So on decentralized exchanges, that's where you now find your Uniswap, your 1inch exchange, your Pancake Swap, your Bitcoin Swap, and the likes of it, and all the plenty swaps. On those exchanges, you are in control of your funds because your funds are not on the exchanges; they're in the wallet where you're holding the funds. So you buy those exchanges serve as just a place for you to easily swap from one coin to the other, and it's back to your wallet. So those decentralized exchanges are not holding your coin. They just enable your trade, and that's all. They just help you to buy or sell, and your coin is back to your wallet. So your wallet is still in your care and not on the exchange. So this is like one major difference between the two. But most people are still trying to learn how to use decentralized exchanges, so they prefer to deal with exchanges like OKEx, Binance, and the rest of it. So I think I got to the point where I have to now show you how to buy and sell. So, but now in Nigeria now we don't have at first the bank connection to crypto made it very easy for you to just maybe your salary just came in and you just feel like you can just easily move a certain fund from your bank account to a wallet and then acquire some cryptos at as little as 1,000 naira. But now it's impossible. You can't buy 1,000 naira crypto anywhere because we are back to the original method of buying and selling crypto, which is P2P, the peer-to-peer system, whereby there shouldn't be any form of intermediary, there shouldn't be any form of third party for you to be able to buy and sell your cryptocurrency. So this actually now cause a bit of limitation and all that, but then it means that if you're going to buy crypto, you have to accumulate your funds to a reasonable amount, so you can be able to use the peer-to-peer system. So this makes it almost inaccessible for people that maybe are still coming up, or are still earning a little. But advice I would give is, if you're someone that have little funds, find a way to save up that fund so it can become a reasonable amount, maybe up to $50, for example. $50 is about 25K. At least with $50, you can buy $50 on peer-to-peer system easily. Nobody will want to sell 5,000 naira crypto to you because it's not profitable to them. The peer-to-peer system means they buy from someone, they sell to you. So they cannot, in a normal market, buy and selling market system, you can't, if you buy tomato 15 naira, you can't sell 15 naira to the next person unless you really buy in a very large quantity, and where you bought it from, they give a discount because you bought plenty. So definitely you expect them to sell the tomato for 55 naira. So 5 naira on top of it is their gain. And that's how the P2P works too. So they wouldn't want to sell small quantities to you because selling small quantities to you is loss for them. So my advice would be, if you're going to use the peer-to-peer system, accumulate your funds, maybe in a short, maybe if you receive funds every week, just accumulate it over a period of time and then use it to buy your funds. If not, you don't really see people that would sell maybe like 5K worth of cryptos to you or 10K worth of cryptos to you. Some people have a benchmark of, if you're not buying up to $100, they won't sell to you. Some people have a benchmark of $500, they won't sell to you because it's also their business. So the peer-to-peer system now is a system that we're using to buy and sell crypto ever since, is that the main system we're using. So Bundle, OKEx, and the rest of it now use peer-to-peer system. They integrated peer-to-peer system into their exchanges or wallets, make it easy for you to convert your crypto back to fiat or convert your fiat to crypto. So at this point, I want to take you through. I'll use OKEx to explain buy and sell. Now, OKEx and most of the exchanges are similar. Sometimes people expect you to still teach them how to use a certain exchange, but then the interface is almost the same, just different color, different design, and all that. But the way you still buy and sell is still the same. The way you set a stop loss, take a profit is still the same. Just probably one or two differences. or 1 or 2 addition or on any other exchange, just to give them the advantage, just give them the advantage and all that. So I'm going to use OKEx to show you how to buy and how to sell. But I'll start from the P2P now, because the first thing first, start dealing in crypto is how do you start with your money. You have Naira now and you want to start trading crypto. What do you do? So I'll be sharing my screen now and we'll get to that. So I'll be sharing my screen. Now this is OKEx now. Now you have your funds. How does the P2P system work? On OKEx, beneath your screen, you will see buy or sell. You go to buy or sell. Now these are, now when you open this buy or sell, it's possible that you will see Express first. If you see Express first, please kindly select P2P and not Express. Now, and it's possible that you will see it in a Chinese currency. Just, if it's in Chinese currency, for example, just go up here, change it to Naira. Now, these are people that are selling USDT. These are the people that are selling, these are people that buy, they're selling. So you want to buy, you buy from them. So when you're selling, you have, maybe you made profit now, I want to withdraw it. These are people that you can sell to. Okay, this prices make sense. So now in the P2P now, you're ready to start trading. And you have, let me say, for example, you have $100. That's about 45,000 for 7,000 naira. You come here now. As you can see now, this person is selling, has a quantity of 700 USDT to sell. And the trade limit, they can sell a minimum of 10,000 naira, that's $20. So anybody that maybe you have 10,000 naira, so you're lucky, you're in luck, so you can buy 10K worth, between 10K worth and 348,000 naira worth of crypto, of USDT. Now, what is the difference between USDT, Bitcoin, and Ethereum? These are different kinds of cryptocurrency. But USDT now is a stable coin. USDT is a stable coin in the sense that the fluctuations of prices in the market does not affect it. If you buy $50 worth of USDT, it remains $50 worth of USDT. But it's possible you buy $50 worth of BTC, and by the time you're done buying it, the value might have either decreased or had gone up. So people prefer to go through USDT. They cannot convert their USDT to the coin they want to trade with. So you can buy. If you go to buy now, before now, of course, you would have updated your like now you go to buy now, and then you tell you want to buy $100 worth. Excuse me.
Oh, just send it on.
So you cannot put 100. So I buy $100 at 49,850, and then I'll buy from the person. I know, and then go to the process. So and on OKEx, when you don't do all these things, you have to have completed your KYC1, which is very easy to do. KYC1 is very easy to do. So you can buy from these people here and go to the process. Now, after buying from them, your crypto is now in your wallet on OKEx. You funded your OKEx with crypto. But apart from these people now, you can also buy from other people. You have someone that you trust. You can also buy from them, and then they will send it to your wallet, and you send them money. If you don't want to go through this system and all. So now you've bought, it's not time for you to trade. Let's just say now I say you should buy LTC, for example. I give you a signal, say buy LTC at 174, which is current price of LTC. What you should do is you should come to market. You should come to market, and then you should come to the market search button. I type LTC. Now you can see that LTC have different trading pairs. It has about 8 trading pairs under spot or margin, and 10 under perpetual and under perpetuals. But we're doing spot trading. There are different kinds of trading, apart from the time frame for trading. There's also different kinds of trading like spot, margin, and all that. But we're doing sports. So now what you have in your balance is 100 USDT. So you just click LTC USDT. So as you can see now, if you buy this coin at this price, you're going to make profits, because a few days ago, that's about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. 2 weeks ago, this coin was at $230. So if you buy it now, you will make an extra gain on it. You make gain at $230 before it started going down to 176. And this coin is a very good, it can give you profit in the next in midterm. So you click on buy. So you click on buy. Now, that's what we call other types in crypto. We have in OKEx now we have different kind of buy other types. So limit buy order, advanced market stop, trigger, trail, iceberg swap. We're going to be sticking with limit and market and stop. So you want to buy now. Let's just say you've checked the price. The price is up here. The price, the market, this is the current market price, this is the current value in the market. So you look at it now. In order to make sure that your order gets filled up, you click on market limit buy order and go to bucket buy order. You're saying you want to buy this coin at the current market price. So just click 100% of a balance, and then you click buy. You've bought the cryptocurrency. So another way to buy is to use limit buy order. Now, limit buy order now, see the easy way to do the limit buy order. This place now, the red part and the green part. The red part is for people that are selling. The green part are people that are buying. So if you're going to buy something, you're going to buy from people that are selling. So you just simply you pick one of the orders for people that are selling, and it will automatically appear in this box. In this box here. And you click your 100%, or depending on your, maybe you have $100 in your balance. So you want to use like 50% or 25% of it. You click 25% of the balance if you want to use 25% of your balance, or 50% of the balance, or everything to buy. So you now buy, and then you click on it and then click buy. After you bought, 2 things are important to do. Don't just buy and leave your coin there. Personally, I always set my sell limit if I want to sell in short term, or if I don't, because it's possible that you have expected price target in mind. But what are the chances that you will be around? You won't be busy, you'll be doing something else, and the price will get there and dump and drop on you. So what you should do is immediately set your sell target. That's one way. This is a profit taking strategy. Immediately set your sell target. So you come to sell immediately. You bought at 176, and you saw that in 2 weeks ago, it got to 230. So you can change the price of this to 230, saying that you want 100% of what you bought. you want 100% of what you bought to sell at $230. So you click 20%, everything to sell at 230, and you go your way. As long as the price gets to 230, you should sell it off, collect your money, collect your profit for you, and it be in your balance. But it's how to take profit now. What about putting stop loss? Maybe you expect the market to be bad, or you're saying that I don't want to take profit. I can check when it's on profit myself and sell it and sell at myself. What if it's on loss when I'm not paying attention? That's where you now have to put what you call your stop loss or your stop order to minimize your loss so that you don't lose so much if the market is going down. So what should you do? You come to your sell and select stop order. Now on the stop order now you're seeing conditional or OCO. Conditional means you just fixing a price to minimize your loss. Why OCO means you're setting your take profits and your stop loss at the same time. In conditional, you're setting only the price to minimize your loss. In OCO, you're setting both take profits and to minimize your loss. So if the price goes up, it should sell and profit for you. But if it goes down, it should close the trade for you in loss. So you now put at the take profit trigger price. You put the price you want to take profit as 230. Then you can say that at market price, 230 as market price. You're saying if it gets to 230, it should trigger and then sell it at market price. But if you remove this market now, you can put back 230 here. So you're saying if it hits 230, it should sell off at 230 for you. Your trigger and your order price. Or you can say 230 and click the market. Then stop losses. Oh, I bought this coin at 176 and it's dropping. And if it drops to 174, it should close the trade for you at minimized loss. So you put 174 here. You put 174 here. You select market. You're saying when it hits 174 at market price, it should close the trade for you in a minimized loss. But if you can also remove the market and just put 174 again. If it triggers at 174, at that 174, it should also sell for you. So this way, if market goes up and hits 230 first, it will collect your capital and your profit. If the market goes down before giving you profit, it will close the trade for you at 174 and at a minimized loss. You bought at 176, but you are selling in loss at 174, but the loss is not so much. It's a little. So you now click the amount you're selling at all this price. And then you click sell. So this is how to set your stop loss. So today we've covered buy, sell, take profits, and your stop loss, including OCO. So do I have a question? You can unmute yourself and ask your question. You can unmute yourself and ask your question. Mr. M, Huge, Moses, Cheap Games.
What I don't really understand is, hello, are you there?
I can hear you.
Yeah, what I don't really understand is that part of the market, when you said if the market supply is under 500 million, that is not a good trade to enter. That part, I can't really comprehend it.
That's not what I said, though. I was trying to give you a pointer. I was trying to give you a pointer on if you want to hold a coin for a long term. What are the things you consider? What are the things you need to consider in holding a coin that can give you 10x? I'm saying that coins that are under 500 million market cap. I never said market price, market capitalization.
Okay, I get it now.
Market capitalization is like, yeah, it's like the total value of a coin at a particular price in the market. And the value of the coin goes up, the market cap goes up. So if the coin is at a particular market cap, I'm just telling you the pointers that will help you pick a coin that you can hold for long term that can give you up to 10 times your profits.
Okay.
Are you clear now?
Yes. But can you please just go over it again in a very short time? Just paraphrase it again so I can really wrap my mind around it.
Okay, I was saying, I'll just giving you tips. This is basically not the class. I have a video on it. I should have a full video, like a short video on it on my YouTube channel.
Okay.
Yes.
Oh, okay. What's the title so I just go watch it?
It should be the last 3-4 videos on my YouTube channel. But
that's cool.
how to pick your 10x coin or something like that.
Okay.
It should be the last, recent uploads there. So basically, you watch it, and then I pointed out things that you can note to tell you if this coin is good. I'm not saying like it's written in stone. I'm saying these are like major things you could look out for that will guide your decision. And then you say, okay, I'm holding this coin for a long term.
Okay, I get it now.
Yeah.
All right.
Good morning. Morning.
Good morning, Huge.
Yeah. You said we can mint NFT.
Oh yeah, I found it on Bakery Swap. Yes.
Yeah. So I need the guidance, the direction.
Not today. I'll do a video for it and send it to the group. Yes, I'll do a video on it. I'll send it to the group. But I think it's very straightforward. It's almost like Rarible. On Rarible, you can mint NFTs too.
Yeah.
Just beyond minting it too, you also let the marketing. But then minting it is not hard. But now that the Bakery Swap you can mint with Bakery Swap, it means that the charges will be cheaper. Because minting on Rarible means it's cost to Ethereum, and Ethereum is now expensive based on gas fee. But minting on Bakery Swap means it's cost to BNB. Binance and the BNB charges are cheaper than Ethereum. So I'll do a video on it and explain it. So let's do the group. All right, so of course, at the end of this class, you can go over the class again because I recorded it, so you can after you missed out, you can listen to this video. I just said this video right now. So when the recording is ready, I'll make it available. Thank you very much for being part of this class. There'll be a class tomorrow morning, but there'll be a class tomorrow morning by 8 o'clock.
Okay.
Yeah.
Okay.
All right.
Thank you.
You're welcome.
So we will still go back to our WhatsApp group. If there's any question regarding the lectures, we'll ask.
Yeah, you can drop it there. Yes.
Okay, thank you.
All right, you're welcome. Yeah, bye. Have a nice day.
Bye. You too.